Good evening, everyone. This is James coming to you from Dividend Stock Talk. It's 1 a.m. on July 30th. I'm actually going to use this as the 29th because I'm trying to do this one video every day where we talk about dividend stocks, and we talk about dividend stocks for monthly and weekly cash flow. Last week we did pretty good. We basically only made 1% for the week, which is not bad if you think about it. It's like 1% a week comes to around, what is that, 50% for the year? Sounds about right. All right. Friday, we talked about the very last week. We got 5 companies to look at. So we're just going to quickly jump into them and find out what they have to offer, what they look like, and whether or not we should maybe take advantage of them on Monday. First one's going to be, I believe that is certified freight. Don't quote me on that one. Nope. CF Industries. I think they do shipping or something. I'm not sure. But anyway, they're offering a 30-cent dividend. Let's put them in, see what it looks like. CF. All right, CF starts the year at a trading range of somewhere between 21 and 25. She trades there for about 4 months. Moves up to $28 area. Trades there for about a month and a half, 2 months. Makes the high of the year a couple months later at 37. That's towards the end of January. And she drops back down to a low of 25. And she goes about sideways in the $25 to $28 area where she is now. Now she's at $28.99, so let's see what kind of offer CF has for us come Monday. All right. She ended up at $28.99, so that would be this one right here. That looks pretty good. Okay, take a look at the seasonality, see what that says. Alright, here's where we are right now, the blue line. It represents from the January 1st to where we are right about now. And let's see, based historically, where this thing should be going. It basically looks like she should be going sideways, because here's where she is now. Okay, Monday, Tuesday, down to the low side. I don't know. That doesn't give me a warm fuzzy, but this does right here. Look at this, 32 cents. That could give me more than 50% return. Let's get out of there, and I like doing 50 contracts. 50 contracts makes it worth my while. Okay, make $900, and it's gonna cost us just a little bit under 1,700. So that is more than a 50% return. However, let's get back to regular chart and seasonality. Go back to the standard chart. There we go. Here's where she is right now. She's at $28.99. Okay, that's just about 29 bucks. Okay, it's a nice price, 32 cents. It's a nice price. It's got the dividend coming up. CF Industries is a relatively good company. It's been around for quite a while. Let's see if it will. Okay, this is basically how it goes. You're buying the 28 strike and you're selling the 28.50, which means as long as the stock stays above $28.50, you're going to make your 50% return. Simple enough, right? What has she been doing for the past year? This is what she's been doing. Look, she starts out in the $23 area, goes sideways for a bit, jumps up to the $28, $29 area, trades that way for about a month or 2 months, makes a peak, then she comes back, what, for 2 or 3 months? 2 or 3 months, and she comes right back to the $28, $29 area, which right where she is. Which this could be support and resistance. You resistance here, and your support way down here. So could she stay at the $28, $29 area for the next 4 days? Well, 5 days, because you have Monday then to Friday. So that's a little over 50% for 5 days. Could be. You never know. Might be something to take a look at. Okay, she had 4 down days in a row. 1, 2, 3, 4. So what's going on with CF? Find out what's going on with CF. If the news looks good, or if the news is adequate, mediocre, or somewhere in the middle, then fine. You know, it's a 50% return. Your break-even point is 28.32. 28.32 is way down here. Could it go down there now? Could it go back down here? Yes, it could. Do you remember what happened with ExxonMobil last week? I mean, hey, they was going to give us a 40% return for one day. What did it do? It tanked the next day. Okay, for some strange reason, the market maker decided to open up low, and she kept on going lower. All right, so that's CF. CF looks pretty good. Let's see what else we're looking at. Market watch. CF looked good. International paper. I made a bunch of money on international paper at the beginning of the year. International paper. If you guys don't remember that, you know, check some of the video and see what it looks like. All right, international paper started out the year at 45.39. She went up a little bit. Let me quickly check this. All right, that looks good. International paper starts out at 45.50. She jumps up to 48 and trades there in a range of what's that? 48, 49 to 45. Okay, 45 to 49. And trades that for 1, 2, 3, 4.5 months. Then she jumps up to a new trading range of 53. Goes sideways for about 4 or 5 months. Makes a a 1 week peak at 58. A slow little downturn so until she hits 49. From there, she goes right back on up to a new trading range of 56. That's where she is now. Now, she had a big down day on Friday. Look at an up day on Thursday. Okay, she opened up at 55 on Thursday. She hit a high of 57, and she ended up closing at 57, 57.49. Okay, now, Friday, sorry, she opens up at 57. She hits a high of 57 and a low of 54, and then she ends up closing at 54.74. I mean, that's a big drop, 57 to 54 for one day. All right, so where's she going to end up Monday or Friday? Don't know, but let's take a look. International paper. Let's quickly take a look at the seasonality. See what that looks like for international paper. All right, here's where international paper is. Okay, she looks like it's going to go down and sideways. So she can go down a little bit, and then she's going to go sideways for the next week. Can we make money off of that? Sure we can. She's at 54.74. And what does 54.74 look good for? All right, the 54.50s, which is right here. 33, that's a good price also. So what kind of return is that going to give us? Okay, it's going to cost us $1,700, and it's going to pay out $850. $850 is about 45% return. Okay, so 45% return for 5 days for international paper. So not as good as the first one, but yet, what is it going to do on Monday? I'd wait until Tuesday or Wednesday to find out what this thing's going to do, because that is a big down day. Oh, you like that big down day, huh? Who knows? All right, next we're looking at JBL. Don't they make speakers? I'm pretty sure they do. JBL Circuitry. Oh, JBL Circuits. They're paying 8-cent dividend. Do we really want to run and check that out? I don't know. Let's see what they look like. JBL. JBL. Okay, interesting enough. They're in an uptrend. Starts the year off at a trading range of 20 to 22. Goes sideways for, what is that, 5 months? And right towards the middle of December, she jumps from 21 to 23, almost 24, goes sideways for about a month and a half, then she slowly goes up, and then she hits a trading range of 28, goes sideways for about 2 months, hits a high of the year of 31.65, and she been going sideways for the last couple of months. A little bit of a drop right there, but then right back to that same old spot. Okay, so JBL doesn't really look that bad. Let's take a look at the seasonality. What does that say? What does he normally do this time of year? Okay, that looks better than the first two we looked at. This is a clear sign that this thing is a steady, right from here, steady upturn for the next week or two. That makes me feel better than the other ones. And what kind of return are they giving us? JBL. The numbers have more to do with it than anything else. Let's get back to standard, gonna like that. Okay, she's at 37.50. 30.50, just right there. Alright, 30.50 doesn't give you a lot of movement, because as long as the stock stays above $30.50, you're going to make your profit. And how much are you going to make? Well, let's quickly take a look. Alright, $750 off of an $1,800 investment. That is less than 50%, so it's probably somewhere around 40-45%. Again, another one looking at 45%, but the downturn is not a whole heck of a lot. All right, you can make money if the stock goes up. You can make money if the stock stays the same, and you can make money if the stock goes down just a little bit, only 7 cents. If it goes down more than 7 cents, that's when you have to start really taking a look at it come Friday. So we don't know what's going to happen to this on Friday. You might want to take a look at some of the news and see what they have to say of what is going on in the news with JBL. Okay, KR is Kroger, right? That's a grocery store chain. They're paying $12.5. And let's find out what the chart looks like. Okay, Kroger starts the year off a small trading range of 31 to 32. Sideways for a couple months, but a quick little dip down to the $30 area, 30-31 area. Then she makes a jump back up to the 33 area. And she trades for a couple of months up in 33. And then right around, what does that say? February, the end of February, she drops down to a trading range of 29. And she trades in 29 for 3 months. And then all of a sudden, in May, or is that June? No, June. Beginning or the middle of June, she goes from 30 and drops down to 22. $8 drop. That's a 25% drop in 2 days. Okay, so once she makes a 25% drop, she trades sideways for a little bit, and she's on a slight little uptrend. And she's in the $24 area right now, so let's take a quick look at what Kroger is offering return-wise. Because the chart looked pretty good. The seasonality, let's take a quick look at that. The seasonality for Kroger, looks not that favorable. So I think we're going to pass on Kroger regardless of what the numbers look like. But just for the fun of it, 24 would be right there. Same thing, you're looking probably at a, is that 30% or 40% return? $1.20, yeah. That's a little bit more than 25%. But I don't like the seasonality. This time of year, the stock has a tendency to go down. So do we want to do that one? No, we say thank you very much. We move on to the next one. Market watch, here we go. Okay, last we got Eli Lilly. Okay, Eli Lilly is paying a 52-cent dividend. Let's put them in there. LLY and see what they look like. The seasonality for Eli Lilly is clearly going down. Okay, that kind of makes me not want to even look at everything else. But we're going to look through everything else just to be thorough. Okay, so Eli Lilly starts the year off at 83. She dips down takes about a month to dip down to 77. Then another month for it to go back up to 83. And then another month for it to hit 71. Then she's back. She's all over the place. Okay, so within 3 months, this thing has made a low of 64. And then 4 months, she's back up at a high of 85. So 64 to 86. That's a nice little jump. Okay, from there, she drops back down to where she started the year out and goes sideways for a little bit. And where she is now is 83.10. So let's see what she looks like at 83.10. LLY. Now, didn't we figure that it didn't have a good seasonality, Eli Lilly, but we wanted to go through it anyway? Yeah, okay, so she's got a downturn, so we're not going to do this one anyway, but she's at 83.10, and that would lead us to believe 29 cents. Oh, wow, that'd be a nice, that's a more than 50% return. Yes, it is. However, the chart doesn't look right to me, the seasonality. Okay, regardless of what the chart looks like, historically speaking, this thing goes down. Okay, whether you want to do it or not, that's totally up to you, but I'm not going to do it, and I wouldn't do it, even if I had the money to throw away. Okay, at 10 contracts, let's get out of there. I like doing 50 contracts, it makes it worth my while. 10 really doesn't make it worth my while. Okay, so 50 contracts. Though it sounds like a lot, it's only $1,500. Now, take a look at this. The max profit I can make is 1,000. Now you have 15,000. This is 66%. Okay, that's 1/3. 66% return for 5 days, if everything worked out the way you want it to. But if she has a tendency to go down historically, then it's not something I want to get into. Okay? Alright. So we're not going to do that one. Where were we? Okay, CF looked pretty good. IP looked good. JBL looked good. Kroger we weren't going to do, and we weren't going to do Eli Lilly because they were both going toward the downtrend. But, you know, seasonality is not guaranteed, but it's something, it's another tool to take a look at. Because you got the dividend is coming up in 10 days, okay? Now, what does the stock normally do coming into the dividend over the last 10 years? And as you can clearly see, here's the crosshairs right here, and boom, there you go. It's going towards the downside. So that's not something I want to get into. All right, that being said, I'm tired. It's 1 o'clock in the morning. I'm going to shut down, and I'm going to do another one tomorrow, Sunday, as we get ready to prepare for our report for the upcoming week. So with that being said, I'm out of here. This is James from Dividend Stock Talk, and we will catch you on tomorrow, but a different time, you know, not this late in the day.